What's up, my fellow traders? Hope you all had an awesome weekend. A quick one here on nat gas, gold, silver, and crude oil, starting with natural gas. So what do we have right here? And as you can see, we still have this pattern valid, and I've got lots of questions from traders that what to expect now from this pattern. Now, this pattern is something I'm looking at for the long-term perspective. In case of a dramatic push down, this is an area from where we can expect another push up, which is our point D. Now, in my last video, I've also mentioned that we have this trend line and market is still trending up from here, and we have a chance the price will push up from here, if not pushed lower to this point D. We are still in an uptrend. As you can see, we have 1 and 2 and 3 touches, and let's say the price won't form a point D. We still have a chance that price will push up from here, looking at this nice trend. But if broken below, then we are looking at point D and this area for our possible trades. Feel free to check my last video out. Now, I've also mentioned that if we have a push up and break above this high, in that case I'll start to look for my pullback entry bullish only. So that is what I'm only expecting at this point. So let's remove this pattern to make things more clear and easy and without any confusions. And a chart needs to be look nice and clean so that you won't make any mistakes. So at this point, we are only looking at pullback entries bullish, and just I need to see a good pullback above 50 EMA and a bullish engulfer will be my entry reason. Now for the trend continuation, I want to see a complete break and close above this high with the body. In that case, if we have that, I'm going to look for another pullback entry bullish and keep on riding up with a trend until the price reach to the next major level of resistance, which is quite far, which I'm going to mention in my upcoming videos. But if we have a rejection somewhere here at the first high, in that case we will have a double top pattern, and for that I always mark my rejection box something like this. Now, if close above this rejection box, that is a signal that price then wants to push up. But this is an area from where we can expect some good pullback that is enough to hit your targets. If we see a bearish condition like bearish engulfer here or inverted hammers here, wick is allowed to go above but body is not allowed to go up. But if we have a wick with an inverted hammer, in that case we'll have a valid sell signal and we're gonna go short. Otherwise, just bullish trades, as I've been mentioning that from last couple of weeks, out of natural gas. So wait for that, look for these conditions. Once we have this condition, we are good to go long, not looking for sell trades as long as we are above 50 EMA. Here on Ovanda, very clear and simple, like mentioned in my last video, that all I want to see a pullback above 50 EMA with a bullish engulfer. If we have that, we are good to go long till here. Right here, 1.895, that goes up to 2.011. This is the zone. Once the price hit my zones, form a bearish engulfer here or a double top here, I'm going to go short. But if it forms a double top within this first top, in that case, that will be also one of my sell signals. So keep an eye. A strong entry will be after hitting of this zone with bearish engulfers or double top entry pattern. Inverted hammers is also one of my entry condition, or 382 candles is also one of my entry condition. So that is what I'm looking at for natural gas. Here on nemex, we are above the first high, and that is what I call a bullish confirmation. Now just remove this to make the chart looks more clear if we are trading on this platform. If we have a good pullback, in that case that is good and there is no need to be alarmed of. If we have that above 50 EMA with a bullish engulfer, I'm going to go for another long trade till we are broken above this high, and then another pullback, another long trade, and keep on riding along with the trend. So that is what I'm looking at. Wait for the pullback, a good pullback followed by bullish engulfer. In that case, I'm going to go long. But for the sell trades, if we have a good push up with a bearish engulfer, or if the price forms a double top pattern, a clear double top pattern here, in that case I'm going to go for the little sell scalp, not a long-term hold, and then I'll exit above 50 EMA and look for the buy condition, a pullback entry above 50 EMA. Now the zone where the price is currently inside of, it is 1.943, that goes up to 2.095, a zone from where the price is currently inside of, and we are looking for our conditions. Let me remove this indicator, and by the way, this is an indicator I'm still testing, not something I use for my trades, but the one that is linked in the description of my video. If you remember, I've already made a video on that as well, but we are only looking for the condition I've just mentioned. Next we have crude oil. Crude oil is now broken below, and if we look here, that is not one of my valid bullish engulfing pattern. That invalidates one of my rule. Now, this aggressive entry wouldn't have been played out even though that we had a push up from here, but that was not a strong push up to hit your targets. But the less aggressive way, pullback entry bullish, it is not a valid pattern. If you are my student in MMTA course, you know what condition is not met here. But now we are broken below 50 EMA. At this point, I want to see some more momentum below 50 EMA and then a pullback with bearish engulfer and keep on taking shots. So rules are very simple. Once we are below 50 EMA, only looking for bearish trades. Above 50 EMA, only looking for bullish trade unless we are at the area of value. Now we have an area of value right here, a major zone. Our trend continuation zone is 78.06 that goes up to 79.97. A zone from where I want to see a good push up, which is a bullish engulfers or double bottom entry patterns. The other condition now I'll be looking at pullback entries below 50 EMA till we are here for the counter trend trades. Next we have silver. Silver is now below 50 EMA and with this bearish engulfer that pushed 1 ATR easily. Now I'm still looking at a level of trend continuation bullish area 25.57 that goes up to 26.34, a zone from where I want to see a good bounce with bullish engulfers or double bottom entry pattern. Hammer candles, 382 candles bullish is also one of my reasons to enter. Otherwise, I'm not in any sort of trade. For my next bearish trade, I want to see a complete break below this low with a pullback with a bearish engulfer and keep on looking for bearish engulfing pullback entry. It is not a valid pullback entry in case you're wondering, but I want to see some push done pullback bearish engulfer to take my valid pullback entry. Otherwise, if we look at gold, we are above 50 EMA. So that is why we still have a chance that gold can push silver up as well. But for gold, I want to see a complete break above this high. If that happens, it will turn into an anchor level and then I want to see a pullback followed by bullish engulfing pattern and keep on taking longs if we have a pullback entry condition. Otherwise, I'm waiting if it breaks above or if it breaks below this low. If broken below this low, then we can look for a valid pullback entry bearish. If broken above this high, then we will look for a valid pullback entry bullish for gold. So that is what I'm looking at. Only looking for pullback trades because we have no major zones above or below. We have this anchor level from where we can expect another push down, but the zone below is quite down and quite lower, a valid area from where I want to see a bounce that is really far away. But for now, only looking for pullback entry above or below 50 EMA. So that's it for commodities, guys. Hope you get a value. If yes, hit a like button for me, subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green rest of the week. See you guys in the next one. Till then, take care.